Nothing is more expensive than a missed opportunity. But would this be valid for the continuously declining IT stocks as well? Well, there has been a significant correction in the stock prices of IT companies. But is this the right time to accumulate IT stocks is the big question. Hi everyone, in today's video, we will look at an overview of the IT industry in India. We will also see how much has the Nifty IT index corrected and what are the plausible reasons for this massive price decline, and whether this is the right time to accumulate IT stocks in your portfolio. So let's get started with the video. The IT industry contributes to 9.3% of India's GDP and is an important piece of the services exports from India. The exports from the IT industry stood at $149 billion in FY21, making India one of the largest back offices in the entire world and a favorable outsourcing destination. In FY22, the total number of people employed in this sector was more than 5 million. And with the pace that this industry is flourishing, the top IT firms such as TCS, Wipro and Infosys are expected to offer more than 1 lakh jobs in the current fiscal year. The IT industry in India provides their services all across the globe, and they have a robust workforce of more than 6 lakh cloud experts. This industry has been an attractive investment destination for foreign institutional investors. No wonder the FDI inflows in the past 2 years has been worth $85.51 billion. The dominant players in the Indian IT space would be TCS, Infosys, Wipro, HCL and Tech Mahindra. On the other hand, there are also relatively smaller companies such as Coforge, Persistent Systems, Mphasis and Mindtree, which have a good hold in the industry because of providing specialized IT services, and they also have a greater growth potential when compared to the dominant players. Coming to the performance of the companies in the IT sector, we could see that the Nifty IT index has had an upward moving trajectory since 2018, with a small exception in March 2020 where there was a short-term dip due to the corona pandemic. But to surprise, later on people realized that the companies all across the world needed a digital infrastructure to promote remote working. And this is when the IT firms prospered really well by providing cloud infrastructure so that the business continuity of these companies was not affected dramatically. However, this bullish run continued only till the January of 2022. In the current calendar year, the Nifty index fell by almost 3%, while the Nifty IT index corrected by nearly 28% in the same time frame. A major reason that Goldman Sachs states for this decline is the macroeconomic stress in the US. The looming recession in the US due to the increasing Fed interest rates had affected the dollar revenue of IT companies in India, and therefore these IT companies have not been able to replicate the growth rate they had achieved in the last 2 years. Also, in this particular calendar year, the foreign institutional investors have pulled out a lot of their investment in the IT companies, and this has impacted the Nifty IT as a whole. The macro slowdown is not only affecting the demand from the US, but also the demand from Europe. Since majority of the IT companies have a huge share of revenue coming from the US and Europe, the near-term growth of these IT companies does not look gloomy as of now, and therefore this has resulted in a selling spree by foreign institutional investors as well. After a correction of 28% in Nifty IT, the sector seems to have become attractive in terms of valuation by certain brokerage houses. As per a note by BNP Paribas, the IT sector is poised to face some near-term pressure on recessionary concerns, but the valuation offered by the industry is quite decent post the correction, and the medium to long-term outlook for the industry looks strong and positive. Mr. Vijay Kumar, the chief investment strategist at GeoJeet Financial Services, states that the US market is signaling a base case scenario of a mild and a short recession, and soon the markets are going to bounce back from the oversold levels. Also, in an interview on Vion, NASSCOM's president Mr. Krishnan Ramanujan stated that FY23 might have a slow growth for IT companies, but the long-term outlook still looks bullish. He also mentioned that despite the macro headwinds, there will be a strong demand for workforce in the IT sector. In my opinion, as of now, one can start accumulating IT stocks and keep on buying more on every dip of 300 basis points. The brokerage and research firm Phillip Capital mentions that the top stock picks in the sector remain to be Tata Consultancy Services, Infosys, Persistent Systems, Larsen & Toubro Infotech, and Coforge. In the current market scenario, the FMCG sector also looks quite attractive for some stable returns. If you are keen to know my top 3 picks in the FMCG sector, you can watch my video on FMCG stocks. This video is only for educational purpose. You must do your own research and invest your money prudently. Thank you so much for watching. Like the video, hit that subscribe button and stay tuned for my next video.